Paramount Skydance reportedly preparing an all-cash bid for Warner Brothers Discovery. Both of those stocks jumping this week on the back of that news. Joining us right now is Rich Greenfield, LightShed Partners co-founder. And we want to talk to him about what this could portend. If you're David Zaslav, do you think you're going to be taking a deal with these guys?
Look, Andrew, I think as we said on Squawk Box back when when the Paramount Skydance deal closed, this really shows David Ellison is a different type of media executive. He is playing by a different rule book, a different playbook. He has massive ambition. Remember, Andrew, he's 42 years old. He is looking at this as how do I build a massive tech-driven media company, which no one has really done, starting with a media business. Netflix has done it from the other side, but no one's built it from the media side. He is trying to do something no one's ever done. And I think the speed at which he's moving in terms of whether it's UFC, the Duffer Brothers who made Stranger Things, South Park, now this, it's just one after another. He is moving at incredible speed. And I think it's going to be very hard for Warner Brothers to say no to this, especially if he puts up a bid of, $20+, call it 20, 22.50, something in that range, mostly in cash. I don't know how they could ever say no.
And what about the economics for Paramount itself? I mean, a lot of this is going to be paid for by the Ellison family. But if you're a shareholder of Paramount, that stock moving as well.
Well, look, I think that's what's interesting, right? I don't think anyone would have expected Paramount shares to surge on this news. You're obviously getting diluted. We don't even know the financials of Paramount. The company hasn't even given guidance of what the new Paramount looks like after the Skydance transaction. They've spent a tremendous amount of money. Presumably numbers are meaningfully lower, but we haven't gotten any color on what that looks like, what the cost cutting looks like. And now we're potentially dealing with integrating all of Warner Brothers and what that looks like after probably a 12-month regulatory process. I think this is more of, it is an idea. This is sort of, you're betting on the big, bold ambition of David Ellison and what he's trying to accomplish. I think investors are probably excited about sort of just building something huge that over 5 to 10 years could really compete with a Netflix, be in the category of a Disney in terms of the scale of their streaming business. I think that's what you're thinking about here if you're a Paramount investor. But look, am I surprised the way the stock acted on this type of a transaction? Absolutely. But again, this is probably not using a lot of Paramount shares directly. This is probably Ellison effectively injecting his own cash and owning the vast majority of the new company.
Right. Okay, let me ask you a different question. Parent company of this network, at least currently, until it gets spun off as Versant, do you imagine Comcast could make a competing bid? There's been a lot of chatter for years that potentially you'd want to merge a Peacock, for example, with a Warner Brothers.
Andrew, I think we were on this air talking to you, I want to say 4 or 5 years ago, saying the ultimate transaction was when Jason Kilar and Jeff Shell were running the two respective businesses, of why these businesses of NBCU and Warner Brothers were really good marriages. Look, if I was Brian Roberts, I'm sure I'm in a war room last night with Mike Cavanaugh and the whole team, and I'm sure I'm thinking about, hey, do I put out a competing bid? There's two problems. One, there's no doubt that there is a regulatory problem. President Trump and the government does not really love, Brendan Carr at the FCC. You do not have fans of Comcast inside the government right now, whereas you certainly do on the Ellison side. So I think it's regulatory-wise much easier for this transaction to get approved by Paramount than it does by Comcast or NBCU. But the bigger problem, Andrew, is you're competing against somebody. If they're paying mostly cash, they can pay a lot more, right? How do you compete? This is not like competing with another company that's levered. You're competing with a company that, okay, whether they spend $50 billion, $60 billion, the reality is Larry Ellison and the Ellison family made more money on Oracle stock this week than we're even talking about paying for Warner Brothers. So how do you do it? You can drive the price up the way they did on Disney, right? The price of Fox in that Disney battle a few years ago certainly went up because of Comcast.
Rich, can I just ask you, I'm thinking off the cuff just based on what you just said, if you think Brian Roberts and Mike Cavanaugh are in a room trying to figure out if they can make a competing bid, I guess that would be smart because it would be hard for regulators to turn down one bid but not the other. But can they do that while they're spinning off Versant? Is that too many things to have happen at once? Or
Well,
would
you
they
don't
spin
have.
off?
First of all, you don't have to spin off Versant, right? Like you could delay that, or you could wait on that for sure, because you might want to wait on that if you were bidding, because then you would spin off a larger group of cable networks, Becky, meaning the Warner Brothers ones and those. But there's one last piece of this. If you're David Ellison, you can't lose, because if you lose, if the board turns down your offer, then they do the split of Warner Brothers. You have to wait 2 years. And I think the reality is there's no way he's going to put out a bid that doesn't win.
Reasons, right? You have to wait 2 years because
Correct.
that would be too disadvantageous to any of the shareholders after you just spun it off from the tax perspective on those things.
Correct. And I think the last piece of this is because I don't think Paramount really thought the split was going to happen. And I think the fact that Gunnar, the CFO of Warner Brothers, started talking about selling a 20% stake before the split even happened, and it might have gone to a strategic, my guess is the Paramount team got a little spooked and started pushing far faster to get this deal done soon before the split, because they didn't want a third party involved in Warner Brothers studio piece after the split, or before the split had even happened.
Rich, if I was like the son of someone really rich, I'd be like Edgar Bronfman. I'd want to get into, like, I'd sell all my DuPont, even with that great dividend. And I'd buy MCA and I'd run it into the ground, but I'd meet a lot of actresses and stuff. I mean, why isn't David Ellison, why not software? Is it the allure, once again, of the sexy? And it's like, it seems like history repeating itself to me. You got a lot of money. I would buy an entertainment company. It's just more fun and more interesting. But does it have more value than an AI startup or something he could be doing?
Joe, you asked one of the most important questions, like, why this, right? But I think the answer is you shouldn't assume they're done. Look at the firepower behind the Ellison family. Maybe TikTok is next. I mean, we've talked about them, Oracle and Larry Ellison. Maybe the next step is buying TikTok and injecting TikTok in. Don't just assume this is Paramount, Skydance, and Warner Brothers. There may be several more steps. I think he's playing 4D chess. Like, there is a whole other game going on. This is not just, maybe they're spinning off the cable networks, like maybe like a Versant-like spin after this. And maybe then they go out and buy TikTok. Like, I think there's a lot of strategic moves. I think what's interesting is obviously they're not really communicating with Wall Street. You know, they haven't done like any form of real like investor communication. I think it's because they are putting the pieces together and they're really operating at, with a real urgency that we haven't seen out of media companies in the past.